Good afternoon, once again. Welcome to the Globex edition of Risk Neutral Trading. This is my virtual trading journal. The daily RTH stream just closed an hour ago, or 2 hours ago, actually. It runs every trading day from 8 o'clock in the morning Central Standard Time until 1500, which is the cash market. And then I've been doing this Globex stream for the last 3 weeks to investigate if there's any interesting trade opportunities in this opening ranges, these opening range breakouts for Globex or Asia. Now, the reason I do this is I have a commitment to never take any trades off of the stream. All trades are absolutely live. You will never see a replay, a video, or I took this here and I got slung there and I made all this money over here. Never will that happen here on Risk Neutral Trading. And because, well, besides I don't like that when other people do it, this is my virtual trading journal. Everything that I see on my two main primary trading screens here is Bookmap and IRT are captured in the video. And my voiceover provides insight as to what I was thinking at that moment. I only trade vetted setups, which means that I know well in advance as they're setting up, if they trigger. If they do, I enter the trade and then I manage it. So that's how the entire journal is captured and recorded. Who would I be trying to kid by doing something stupid, right? Or trying to rig something up? It's my trading journal. It's not for. That's the main purpose here. And having said that, however, I am not licensed, or do I intend to provide trade or financial advice. What I intend to do is allow people to watch over my shoulder, contribute. I really appreciate that. It's a collaborative effort. This is not my way or the highway, but this is my trading journal. And people, the subscribers here and the people that join in the chat through the normal trading day in the regular RTH stream, all of that keeps me accountable and honest, and prevents over trading. I mean, there's a lot of benefits to it, so that's why I do this. Now, we've just started by the way, tomorrow is Juneteenth, the big holiday, and a great holiday, actually. Emancipation Proclamation, if I'm not mistaken. I know it's just into slavery, but I don't think it's the exact date. I think they chose, I'm not sure about that, but it is Juneteenth. Tomorrow is the holiday. There'll be an early close. I typically scrub the holidays from my IRT, which I will do tomorrow afternoon. I don't like half days, part days. It screws up all the references and the, relationships between the session prices, etc. So this is Bookmap. I've just put the blue boy on the job here, which is the vertical line that I put on the first print of every session. And that enables me to, let me say it this way. If I see blue boy on my left, excuse me, and I know that this is the active live inside market, there's no question in my mind that I have the entire session in view for context, right? There can be no question. So that's why I do it this way. The other charting technique or charting system that I use or platform is IRT, which is this one. And so let's see how this evening, or this Globex and Asia opens start to unfold here. We had a pretty crazy day. It was an inside day all the way through the cash market, and about halfway through the closing curb trade at about 4:30, they finally tagged out the IB high. Until then, The IB was an inside day, the entire cash market. You can see right here, actually. That little right there, it pierced it and came right back down. Was as far as that ever got. I mean, NQ is completely different, but I'm talking about the ES here, and this is the MES. These charts are MES, NQ, my high time frame micro composite for the MES, and then this is the market profile for the ES. This is the same tab for the ES, the minis. This is the micros. If you're ever curious about IRT, the header of every window here has the instrument, the period, the chart type, the periodicity, and the session. So you can never be lost. I'm not muted. I'm talking. Okay, everything looks like it's running right along here, so that's a good thing. Market profile here, I don't change from mini to micro, but I do change from the RTH session to the full session. So that is a difference. This is my higher time frame, as I said, my micro MES chart. And the way this works is really simple. Again, the instrument, 1 day, the chart type and the periodicity, and the RTH session. So every one of these candlesticks here is one full RTH session. Monday, Tuesday, Wednesday, Thursday, today. Wherever price overlaps, I pull this volume profile around them, and that generates a microcomposite VPOC. These high and low volume nodes here are marked by the red and green lines, and the values for those nodes are pushed automatically to Bookmap. The session prices here are also pushed automatically to Bookmap. And that's all right over here. Here is my microcomposite column where I manually enter POC and things like that. These are the high and low volume nodes. This is the full session volume profile, which just started plotting. There's the high, there's the low. Well, there's a low because it hasn't moved down yet. And this is the RTH session volume profile in Delta. This is my statistics column, which I fill out, and we determine the statistics for the associated prices every morning during the pre-market at 8 o'clock in the morning. By the way, all the times that I speak about or that are visible on my charts are Central Standard Time, same as Chicago, same as the market we trade, futures. Also notice that in the spirit of transparency and accountability, I stream the entire monitor, not just the application. So you can always see what programs I have open. You can always see the system clock to the second, the date, and that ties back here with the trading platforms. Again, who am I trying to kid? Who would I be trying to kid? It's my journal, right? You know, I'm not trying to bamboozle a bunch of noobs so that they subscribe and, you know, I get a bunch of money from YouTube. That's not the point, and that's not how this works. So transparency, accountability, and also let me point out that we don't have much interaction here in this Globex, and that's perfectly understandable. This is basically homework. But during the trading day, there's a lot of interaction in the chat, and the purpose of this stream is not my way or the highway. It is what I'm doing now to develop a consistently profitable trading business. And any suggestions, comments, criticism, you're out of your freaking mind, you know, that's perfectly great. I really appreciate all of that. Anton has contributed a real interesting hedge thing, which is part of what I'm testing now. So here we go. All right, we've started. Obviously, there's the high so far, the low. At one point, the low was put in first, and then the high. But now we've extended the low. So at this point now, the opening range high is was formed first, and the low is sitting down here. And that's important when it comes to the data, the analysis tool, which I'm using from Edgeful. Because the statistics, they drill down in, they become, it's like a funnel. And the more precise, the more granular the filter, the more accurate the statistics and the more interesting the probability. And I believe statistically significant. So here we go. Let's see what's up. Let's see how the day unfolds. This has pulled. Excuse me. Doing the yawn thing over here. What was that? Oh, he giving a Medal of Honor to somebody. Okay. That's pretty cool. Good for Trump. That's a good thing to do. Obviously, these last few days have been pretty crazy. News, a lot of news, this MOU and potential disruptions or, potential dangers to the agreement and to the peace are pretty high right now. I would say. Okay, let's start to do the data drill, all right? So typically, let me first say this. We'll go ahead and confirm the setup to be able to trade on Bookmap, which is pretty important. Man, I always forget to do these chapter markers. Okay. So let's be able to trade with Bookmap. Don't you think that it might be a good idea? And the way you do this here, you need to activate the trade control panel. Now it's still active from earlier today, but this would normally be, let me just deactivate it and you can see exactly what I mean. The padlock is just sitting there and it's not green. So you click the button, you choose an account you're going to use. In my case now, in this particular instance, I'm using these Lucid accounts because it is the most effective way to de-risk from my funded AMP account when I'm doing testing. And I still am able to trade normal sizes and I'm able to get paid. So that's, a double, triple whammy or something with minimum risk. And so I've chosen the account, I've set in the 5 contracts, click the button again, I get the real estate back, I have all my trade metrics up here. You can turn these off or on, by the way, they're not automatically there. And then I also have cancel and close. Now one step you have to do further after that is you need to go make sure that the, these just updated, so these will be different. Need to make sure that this is the right, it's pushing the data to the right journal. That it is, what else got updated? Multi-account trading is on because I want to multi-account trade, obviously. I want to push this one trade to all 5 of those Lucid accounts. That is the efficiency of scale, or the economy of scale, by doing this. That's how it works. So we're 15 minutes or so into the session. We're set up to trade. Now I got to do the same exact story over here for the hedge instrument, which is the mini. And that would be the same contract, be one, the same, account, one contract. Shut her down, and now this would be the mini hedge. The mini me. Okay? Notice the difference here. The POC is still up here at 76. There's quite a difference in the way these things operate. The POC on the mini is still at the same price. Then over here, it's all the way down here. Interesting, isn't it? I think so. A lot of people say they watch the mini and trade the micros or whatever. I don't know how you do that because there's big differences. POCs, levels. I don't know. Anyway, good for them. I'm good for them. I just don't know how. And so now we're set up to trade the hedge. We have that in place. I'll explain what that's about later. And this is what we've plotted so far right here. Let's get this a little bigger. Okay, and we're over here, huh? Right there. Now, this doesn't ever change, so that's okie dokie. We have, let me just, now, get back to the beginning, I guess. Now that we've set these up to trade, any trades that I take, and as I said earlier, in Bookmap are live, real-time, never recorded or replay or anything like that. If I don't have a trigger and I don't take a trade, nothing there. It's real simple. In IRT, when I'm forward or back testing strategies to vet them, to be able to trade them live, I do that with the coding up the system. I can back test it. I can forward test it by sending the results to this chart for visualization purposes only. And this is done in the simulated environment of IRT because I'm not going to risk money on my coding ability, for one thing. So this it's real handy, can be done that way. And this is the Edgeful IB system that I've been working on recently. This would be the IB here and the zones. Now this is where we've started Asia, and there are no zones because I haven't coded that up yet. I'm not sure it's worth it or that it works. That's the purpose of this homework test we're doing now. So you've got it. IRT, Bookmap, we can trade. The hedge is ready to go, queued up and set. Now let's start looking at the data. Boom. The first thing we need to do is change the session to Chicago Globex, 5 o'clock p.m. to 7 p.m. I'm only interested in data in this 2-hour period. I don't want to know about what was the probability of achieving IB high breakout at 4 in the morning. That's not of interest to me in this first test, in this first bit. So we're going to go with this one. And now here's the general rule by weekday. And this is now Friday's trade, right? Because that's looking back a year. There's no data, is that right? Could that be true? This doesn't like weekdays. Let's just do the standard report. Okay. Remember that in the Globex, we're always trading. This is Friday's trade, even though it's going to be a short holiday and all that. So there's an 84% probability of a single break, 3.325 of a double break, and 32% of no break on Friday. MES, looking back 6 months, and we don't have any days over here yet. So, I don't think it'll fetch data if I do the by weekday. Let's try it. Usually I get a problem with that. Let's see if we can get some more days and get some data. Typically up here it's going to say can't fetch. Well, nothing's happening. So it doesn't know anything down here. Now let's look at something else. Suspicious, huh? It bothered me. I don't think I've got the spirit of this session right. Maybe what I'll do is change this to wait a minute. Let's look at something here. This is Trading View, by the way, just in case you don't. And you see, I've got to change the dashboard up here, but we're already starting to plot the, first of all, wait a minute, let's get rid of this one. We're already plotting and trading, or we're already plotting, not trading, but plotting. So there's the dashboard. Here's today. You see where we took the IB high out after the cash close in the curve trade, they call it. Called it. And let's look at this one. I need to figure this out once and for all. I'm frustrated by that. I've even gone back and forth with their support guys. So far we got 13.5 points on this opening range. The opening range high was put in first, just as we know from Bookmap. And we're trading. Now, what I wanted to do was, I wanted to, okay, this is UTC 10 to 9. So if I make it UTC 9, it should be, I'm sorry, 8 to 9. It should be 7 to 10. And the period is 8 to 9, 1 hour. 8 to 10, UTC 10. I want to get this right one time. I'm sick of dealing with this. Wow. Yeah, 1700. So let's set this let's set this up to UTC 9. Okay, what do we got here? We've got UTC 7 to 9 to 8:50. Oh, wait a minute, to 9 o'clock. Okay. 7 to 9 UTC 9. UTC 9, 7 to 9. Well, cool. That should be correct. And that should be for Friday morning because it's Asia. All right. I'm going to go with that and hell with Chicago. I'll figure out Chicago some other time. Anyway, so here's our stats. There's a 44% probability we single break. There's a 1% probability that we double break. And there's a 53% probability we don't break either one. Generally, by the day. And the days make a big difference. Well, they do on the other sessions. Let me put it that way. So what we're going to do next is we're going to do the next report that's important that I like is the rejection. Now this is where which level formed first is important. This moment we still have the IB high formed first. So we want to make sure that we've got the right days and stuff in this customization. So this is Friday. Oh, wait a minute. Don't want Thursday. We want Friday. And we want this to be all days. And we're on the correct session. So on Friday with the IB high formed first, the IB low is the most likely to be taken out, but it's only a 30% probability. As we sit right now, without any ending zone. Let's see if we've got back to 6 months or something here. Let me see. Yeah. So that's how we will continue to play it. I mean, that's just the data as we're drilling into it. And here we have, let's get away from this and get back to what we're calling. I get real confused. So, all right. Are we together now? Have I completely confused myself and everybody else? Probably. So here's the curve trade. This is, 1,500 right here. It's the cash close. They did finally come up and take out the initial balance high, but only after the cash close in the aftermarket. And here is now the Friday trade open for the extended hours or ETH or Globex, whatever you want to call it. All right, let's see what we're doing now. What I'm going to do over here, because I am a lazy little puke and I haven't done created those lines and levels and all that stuff. During the day, all of the IB levels and zones automatically calculate and push from IRT to bookmap. So I don't have to worry about it. But until I have a reason to do that, I'm not going to. So we're going to do it the old-fashioned way, baby. There you go. That, I think, needs to probably go up a tick, but that is high. That was stupid. I was looking for edit and I missed it. Oops. And we keep pushing the low down, so I'm going to wait to put that one on. We've already traded the first 30 minutes. This first session really goes fast. I don't know why. I noticed that the other day. Not so much for Tokyo. Not at all. Well, I don't know. We are getting some movement, so let's see what happens. I was going to say I'm not at all anticipating anything present itself to trade, but you never know. I mean, we are getting some movement. Now, if I had a vetted trade based on the VPOC migration, that would be pretty snazzy, huh? VPOC migrates down, short. Confirm, short. More short, you know? Short, short, and more short. Just today, huh? They had a real problem getting out of today's value area. Only late in the day. So am I still, are we still, is it still? Yep, looks like we're streaming along and no drop frames and oh boy, everything's coming up roses. There they go through the POC like they were thinking about it. But we've got quite a range going on here. 80 to, well, 20 handles. It was 50 handles on the IB today. Which is undoubtedly one of the reasons it was contained. I mean, the price was contained. But that was quite a deal. heard a real interesting statistic about days following the FOMC. It's all the FOMC meeting is always on a Wednesday. The rate thing. I heard an interesting statistic, but before I start regurgitating it, I'll make sure I got it all down, and vetted. Right. Here we go. Ho, ho, ho. I really like the fact that this scoots right along this first hour. I wish the other one did. Now, of course, we're going to wait for the first 1 hour. I guess I should maybe talk about that a little bit. And the reason I'm using TradingView a lot now, I discovered that by invitation only, when you have a subscription to Edgeful, all of these indicators are available on TradingView. So I thought, I'll check that out. Well, they're really handy. It's really handy to go here's this. We were looking at something yesterday afternoon during the stream. We were talking about when Trump came out in this Trump dump, why did it stop right exactly there? And then back up. Usually I would consider that a fat finger. But here's the interesting part. Look at the IB from the Asia Open. Exactly to the tick. Whatever that level is. I mean, why ever that's an important level, I still don't know. But I thought it was really interesting that happened. And it remained resistance through London, and I don't see if there's any. Let's see. Another thing you can do here, pretty handy. Let's see if there's any kind of significance in today. Not really. I don't see any significance today, other than you could make a case for, support and resistance here. I don't know. It all starts sounding a little kind of like a Ouija board, but you see the point. Really handy, and these are the only indicators that I use, really, which is session, the opening range indicators, and this is the initial balance indicator. I keep them separately. I think of them in terms of the initial balance. To me is only in terms of the RTH session, and the rest of them are opening range breakouts. So here's the opening range breakout we're dealing with right now for the Globex, and here was yesterday. This is the first time in several days since I've been doing this for 3 weeks that Asia was not directly overlapping the Globex. So there was this movement last night, but there was no entry. There was no trigger. Broke the IB high and didn't retrace at all, just kept cooking. A problem that I have with the Asian session is, here's the IB. Okay. There's the high broken out. Okay. There's the pullback to the 50. Okay. Let's get long. Until 1 o'clock in the morning. Well, I've got to sleep sometime. I've been up since 4 o'clock this morning. When this is over, it will be about 16 or 17 hours on the desk here, and this is a stand-up desk too, by the way. So I have to make a decision, and that's why I'm doing this homework. If I see opportunities somewhere, I can certainly switch around. That's not a problem. But I'm not going to do it just for the hell of it, if you get the point. But this trading view is pretty handy. Gotta say that. We've put the high in first. The opening range high has been put first, and we're down here now, and we've got a 19.5, 20-point range. So each one of these 25% divisions here are 4 points, right? 5 points, I'm sorry. You got to I have to keep that in mind, because when I have a potential setup, I need to quickly be able to analyze if there's enough meat on the bone for the trade. Risk to reward, you know. Well, okie dokie. Well, we're coming up on about 15 minutes left. Now, in the opening range breakout, in this, especially this Globex, I don't see any future in front running the level. The high was put in first still. Doesn't look like that'll change anytime soon. There's only a 30% probability we're going to take the low out without having the ending zone data in there. That's the only filter that's left. And this amount of data makes a big difference, of course, because it gives you more frequency. And then we're going to, let me continue on before I lose track. I don't know whether it's better to explain it over here or on using Trading View. Let's look at Trading View. So it's a 30% probability that we'll break. We keep this same configuration. 30% probability we're going to break the IB low first. Looks like a reasonable idea to me. Now, if the price pulls, if the IB has been set, or the OB has been set, and we have not broken it out yet, there's a front-running concept where it pulls back into the 25 or the 50 and you go short because you're going to lean on that 30%. To me, that 30% is not nearly enough edge to front run. So what happens after that is two things. We are when the opening range period sets 1 hour, we will have the ending zone identified. We'll talk about that in a minute. And then we can look at the retrace probabilities, and there will be a retrace percentage to 25 and a retrace percentage to 50 and a retrace percentage to 75 from the bottom. So the theory is, what I've done and what I think other people do, if it's a big difference between 50 and 25, then I would extrapolate somewhere in the middle here, and that would be the entry, targeting the low or end points south. rather than trying to front run. If that makes sense. And at about 50, I'll start drawing a bunch of other lines around here. Well, first of all, I guess I better get my tool up here. So here is the hedge tool. And the reason I'm doing that now is I put this little guy together here just for this purpose of drawing these zones. So our IB high is 80. And we'll confirm that. The simplest way I know to confirm that is right here. So there's the 80. There is the OB high, 80. And so far we're down here to about 50. We'll wait and see where we go. So we've got 80 in there so far. And then all I need to do is throw the low in, and it'll give me the percentage zones. I can start drawing them out. Well, that BPOC migration short is a beautiful thing. Strictly hindsight, but you know, there it is. Boop, 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 boop. I've never been able to. That is a statistic that is so obvious. It's the first one I think everybody starts looking at. I've never been able to vet it properly. But I mean, how obvious is it? How can you miss the yellow brick road, right? So do you enter the minute it migrates? Do you enter when there's a retest up? Do you enter, it's all those, it is the entry parameters that matter. Everybody can see the initial rule or the initial setup. But it's the entry criteria that validate the criteria that validate the entry. That's the key part. And that's what's so important about vetting the trades and backtesting. And it's not a slam dunk, a Rooney. Slam dunk a Rooney. Well, are you going to go up now and fuss around, or are you going to go back down? What are you going to do? The reason I'm stalling here is I don't want to have to recalculate and move these levels around. I'd like to just do it one time. But that's the handy part about TradingView. The levels are automatically calculated as the same as they are on my in my initial balance right here. Will it stay there for another 10 minutes? Maybe. We can try it right now, I guess. So it's 75, 59, 75. So these would be, let's see if we've still got the right range. I always quickly check that against TradingView. Yep. And then these would be the zones, but I'm going to wait until we have the full time set before I do this, and then we'll be able to determine the ending zone percentage and look at what we can deal with the data. Our line is right, would be right here at 59.75 now, and that looks pretty good to me. I mean, that looks pretty accurate. But I'm going to wait at least until 55. It's not like prices going nuts here, yeah? So we don't have to be in a big hurry. One of the great parts about trading vetted, structured trades that you've actually done the homework on, and you've really done the back testing and vetted the trade, not just the lip service on the chat room of, oh yeah, it's my structure, my vetted trade, whatever. There's no surprises. You see the setup start to form, you watch for the parameters of the rules to fall in place, and if the trigger falls in place, Bob's your uncle, you got an entry, and then you manage the trade. I know that sounds kind of crazy, but it's the truth. A hell of a lot less stressful and adrenaline packed than, whipping and spurring or gunslinging or a bunch of discretionary, I think about this and I've got that. And maybe those guys that are good at that don't have any problem with it and are good at it. And I, again, it's not my way or the highway here. You've got a system that works and you're consistently profitable. Don't think about changing it until it isn't profitable anymore. And that's what happened to me on this first initial balance one. It was doing really well, and then all of a sudden I exceeded and you never change a vetted setup until the results are outside the parameters of your back testing. So until I had more consecutive stops in a row than I had accounted for in the back testing, there's no change to be made to the system. And you take every one of those that presents itself in the live market. But you can appreciate that if you can pretty quickly start dying of 1,000 cuts, right? So that's why I quit trading the big one. Now I've noticed that I'm gonna have to run some back tests on it again. It's sort of coming back, but I'm trying to get this. I like the idea of the percentages of the range as opposed to fixed zones or levels. Just me. I could be crazy at Pat Cohen too. That's another possibility. So we need one at 74.94. Let's call that 78. Wait a minute. $75. There we go. Well, hold on. That didn't sound right, even if I said it fast. And 69.75. And 64 or 75. If I wasn't such a lazy puke, I would remember how to code these things in so they would spit out quarters instead of, what is it, 64.75. So they would spit out quarters over, be correct with the quarters instead of, or ticks, So there are the zones. There's the thing. As long as we make it another 4 minutes, we're okay. And we can start thinking about the ending zone data. And what is that, you ask? Well, it's real easy. You start assigning the percentages opposite the first level that formed. So down here, 0 to 25%, 25 to 50%, 50 to 75, 75 to 100. Which zone do you pick? The closing price of the last bar in the particular session, in this case, in this 1 hour. If you were doing a 5-minute chart, it would be in 5 minutes, right? So when we get to 1800, the closing bar right here of that, the closing price of that bar, of the last bar, where it is located is the ending zone. In this case, it would be the 0 to 25%. If it stays down here. And if it goes zooming down a little lower and puts a new IB low in, I'm going to be ranting and raving and cussing and doing all kinds of stuff. No, but I don't think I was showing that, but here we go again. You assign the values in percentages opposite the first level that was formed. So 0 to 25, 25 to 50, 50 to 75, 75 to 100. And the zone determination is based on where the location of the closing price of the last bar in whatever you've set up to be the session. In the case of the opening range, or in the case of the IB, it is the first hour. Now, for example, I can show you today's IB. There's the IB high first. 0 to 25, 25 to 50, 50 to 75, 75 to 100. Here is the closing price of the last candle in the first 1 hour, because this is the open and it closes outside the first 1 hour. So that's the price. So what is the ending zone? It's in the 25 to 50 bracket or zone, the percentage. And that's how it works. Very simple. Data and if you lean on data based on statistics and probabilities, or I should say you lean on probabilities based on real data, it's just kind of a logical funnel, and nothing is mysterious, right? There should be no mystery or discretion, because that's counter to being statistical and system method driven. I think, again, I'm an old cowboy from Montana. I am not rocket science from MIT or math guy. So, and that's where the stream is great. And besides it ensures accountability. The interaction with the folks in the stream and the chat, I learn stuff every day. We had an interesting chat just at the close with Anton and Magic about imbalance, large imbalance zones in the data, and I was trying to understand, because I have a different concept about how you could have an imbalance. So I need to research that over this next weekend, these next few days, make sure I understand. So here is our zone. Just gonna turn over here in 2 seconds. Bam. Okay, I'm gonna, just for the sake of visualization, I'm gonna throw this guy right there. That's the end of our 1 hour. Where did the candle close? In the 25 to 50, right? Right there. So here's our zone. There's where we closed. Let's get back to edge fill. Now we can put in the ending zone data. And that's going, and watch, first of all, hold on a minute. Nobody move. Initial balance high first. So we got 30%, 2 years, MES, 31%, say 30% that the IB low will be broken out. And 11% it'll be the high. So let's put in the low and see what, or let's put in that value and see what changes. Huh. 38% and no probability or occurrences of the initial balance high being taken out. So now even though that's a fairly low percentage, in my opinion, and I'm not real sure about that. But anyway, I won't say anything. Now, if price pulled up here to the 25% zone, you could sort of be justified in front running. You know? Because there are no instances over 2 years of data where, and you've got basically 13 IB high formed first and 28 instances where the low formed first. So you're starting to get some substantial enough to be, statistically significant, I think. Let's look out further and see what we get. Let's look at 3 years. The thing I have in the back of my mind always when I'm doing this that somebody pointed out to me, because I always back tested 5 years in IRT. And somebody said, well, do you suppose that a trade strategy or a trading methodology that was working 5 years ago would be working today with this environment and this administration and this market? And my only answer was, no, I don't think so. So now here we come. Now I have to start making a decision whether to fish or cut bait. We're going to come up here. We're approaching the 25%. Let's do the next step here, which is we've got 3 years. That's our percentage. Let's go to Electric Avenue. Retracement. This doesn't have anything to do with the closing zone, but it says that if the initial balance low is broken first, or broken, in other words, break down, which is what we would expect, 63% probability will pull back to the 25, 27% probability will pull back to the 50% line. Meaning, assuming that they break the low, there is a 64% probability it'll retrace to here, but only 27% it'll get to 50. So what I would do, I would think, okay, if it gets up here to this Globex VWAP, I would probably short it. But I'm not talking about front running now and this is where you can lose an opportunity, and I don't know what to say about that. If it pulls up here first, do you try to front run it and that's a bet? Or do you wait for the statistic to be broken, the statistic to be satisfied where it meets the pullback, and then you take the trade? That's the big question. Forget to do my exercises. I've got 2 stand-up desks here, and I got a big enough office that I can step back and do squats and stuff. And I've got a chin-up bar in the door and dumbbells on the floor, and but I get so engrossed in what I'm doing, I stand here in 12 freaking hours, and I'm just standing here at the desk glued to the screen. Amazing. Don't eat my own dog food about taking care of yourself. So, back to the dilemma. Well, and there may not be a dilemma. I would only be in that position if price pulled back up here now before taking out the level. If it goes down and takes out the level, that's taking the decision away from me. You know what I mean? Let's just quickly check over here. Okie dokie. So we got a 20.5% range, or I mean tick range. The high was formed first. There has been no breakouts. Right now we're 16 points, 16 and a half, or 18 and a half it is, yeah. Ticks off the high. So there we go. Really a handy thing. I feel so stupid, kind of, never looking at it like this. I mean, obviously, when you go to YouTube, pretty much everybody you see with a YouTube video is doing their magic. Well, this is where I got high and I got short right here, and this is where I made all my profit, and I took $2,000. You know, they're doing it all on TradingView. None of them are doing it live, but they're doing that. And it's always TradingView. So, I'm a snake, I guess, for not checking it out. I guess. Now I have to really think about what I'm going to do if I will take a trade. And that's a big if. What I will do, however, is the hedge. Now the hedge is simply a alternative for the hard stop. I will never put on a trade without a stop, or, you know, that some mechanism at that level. And I will never move that stop or that mechanism away from the entry, ever. Just like I don't overtrade and a bunch of other stuff, or FOMO or chase or any of those kind of things. So, but let me just show the hedge mechanism. Remember, an alternative, not a replacement. I mean, not to ever be without a stop. So the hedge will go like, okay, you're all done over here now, buddy. Where am I going? Here we go. So this is, obviously, we know we've set this up. This is 5 micros. And this is set up to trade 1 mini. Okay? Let's pretend, for fun, that we've already got this set so we can move on. Let's pretend, where the hell are we now? 6,300. Now let's go 6450. Let's pretend we're at the at this one. Let's make it, okay, here we go. Let's make it 66. This will be fine. Do you see where I'm at? This is hypothetical. Hypothetical short entry at 66. So we're going to go 75, 66 over here. Whoop. And it's a short. Watch the prices readjust. Now, this is 5 contracts, micro, MES. Stop location is 12 ticks, MES. The add instrument is MES, and we're going to add size, we're going to add 5. And we're going to add 1 ES. So the way this mechanics works is, here's our original short. Price goes this way, Yahoo, Bob's your uncle, and everybody's happy. And you can put a You can put a trailing stop in behind it as it goes down, and all those typical trade management things that we're all used to. But let's pretend, just for, I know it never happens to anybody, but let's pretend that it doesn't go in the direction of the short and it comes back to the stop. Because those nasty old market makers are hunting my stops. Comes back to the stop, which is at 75.27. Now, the minute you put in the order at 66, you go up here to, wait a minute, what's going on? I can tell you what's going on right here. It's got to be 75.63. Duh, football. I'm going, wait a second. Or no, 66, wasn't it? 75.66. How did I get that? Okay. That makes sense. Here's 75. I was going, wait a minute, that didn't make any sense. 75.66. So, when price somehow, some evil comes in and the price comes against us to 69, I'm sorry. The minute that you're going to put this trade on, and I could do it right now, you put a limit order at 66 because that's what you've decided is going to be your entry point. You put a second limit order sell at 69. That aligns right here. Assuming price comes up here and on the hedge, I'm sorry, and over here on the hedge, you put a buy order for 1 at 69. Right, we're not going to do that, but you know what I mean. Wherever we are, up here, the buy order would go right there. So, price comes up, it hits our level. We buy another 5 short, sell another 5 short, and we buy 1. Now we have now reached the hedge, right? The 100% hedge, because there's 1 mini is worth 10 micros. And we've improved our location to 67.50. So the maximum hedge risk we have on are these 6 ticks right here. Price goes up, price goes down, never going to change. It's going to be these 6 ticks right here. Until we get to a position where we need to make a decision to take one of the legs off. Let's assume that price comes down here, heading for where we thought it was going to go in the first place, and it gets down to 67.5, for example. We can take the long leg off at 67.5. And here's our scratch level. It has to go down to here to scratch. If it goes this way, we're going underwater quick. We're going underwater to the tune of however many ticks times 10 micros and 1 mini. So you got to be real careful about how you take it off. That's the part I've been working on and a little bit apprehensive about. And that's the part that I usually back test by looking back in. If you don't know anything about Bookmap, it's got a phenomenal back testing or replay capability, and you never worry about it. If somebody doesn't stream the entire screen, be suspicious, because right up above here will be a progress bar, and a little box that'll say all about replay such and such, and down here it will say replay, not real. So if they're only just showing this part right here, be careful, because you cannot tell if it's set at market speed. You can't tell that it's a replay. The market is ticking over just like this. There's no jerks, there's no jumps, and everything would be normal. Even if you put in, and you can trade just exactly the same. It graphs the orders, it plots them out, it does all that stuff. But so what I do is I look back a couple of weeks, because I don't remember price data for, last month. on a specific day, and then I can replay it and do this hedge this hedge idea. No problem at all getting in the hedge. My problem is which leg do you take off first, and more importantly, at what point? And what I want to determine is, where do I put a fail-safe? The oh shit, stop. Where does that go? Because assuming you take off, well, you could, if price starts going this way, where this starts to be in the money, you could take off the long leg also, because remember, they're equal. This is equal to this. So, well, we can do that right now. Oh, this is the long leg. Okay. So we could do that. Let's say we take the long leg off when it comes right by here at 89. Isn't that right? 89, 69. What am I at? 75. Let's take the long leg off. 75.69. See what this says. If we took the long leg off here's our scratch. So price could come back down to us here, and we could take it off right there and we'd be scratched. I wish it was that way. Oh, I'm sorry. Price has to pull back to here for scratch. I got to make sure the math is right and I have that clear in my mind, because as you can see, I don't, or if you can hear me pause, I don't. I want to make real sure about that, because a couple of times doing retests or replays, I'm not paying much attention, just so I'm going to try taking the long leg off here. And all of a sudden I was upside down big time. And you have to watch them both. You're getting P&L moving over here, and you're getting P&L moving over here, both. So the ideal situation would be to be able to have both. And another thing, let me also point this out. This position and all of this data is only applicable to this tab. This one is only applicable to this tab. Well, this is only applicable here, as is the close and the cancel and the close. So you have to be really quick on your feet. And that's why I want to have this mathematically show me if you got which one or the other one off, and it gets to this price, you better flatten fast, or you're upside down. And I don't know that number. This is all new, because if you followed the stream at all, I always used to use multi-brackets, which are somewhere right here. Well, I can only do sim, so it's okay. We'll look at the sim. Oh, shit. Oh, it doesn't want to play nice here. Selected the wrong add-on for your mode. Please reinstall the add-on, select multi-brackets. Well, I thought it was sim. Maybe that didn't work. Okay. So I guess now we're not sim. That's right. Jesus Christ, this is not sim. This is the live market. So I better get to bed immediately. So this is how I've always done it, and this is where the name risk neutral trading came from. These are the risk neutral package. The minimum package size is a 2 lot, because it has to be an even number. And then you establish a stop loss for the entire package. 12 ticks. Coincidence, right? Same as over on the other side. When you've done that, and by the way, establishing the stop loss isn't just picking a number. You need to First thing you need to look at is your account risk parameters. You need to look at the volatility of the instrument you're trading, all those things. Say this is correct. The first take profit target is automatic. It's for half of the package and for the same number of ticks positively as the stop is negative. At that point, the trade is risk neutral. There's no way you can lose any money unless you move your stop away from the entry. And you've got a runner. So that's how I traded for the longest time until the hedge idea came up. Anton shared that with me, and so I'm trying to get my head around it, because what the hedge does is, rather than look at here. Now we have not taken the statistic, but here we are at the 25. We get up here to the 60. Do I bet in front run? My initial feeling is no. No siree, Bobby. Well, what I was getting ready to say was, what the hedge does is it buys you time. Oftentimes, I'm sure it's happened to anybody that listens to this, if anyone ever does. Oftentimes, price will come, hit your stop, and then go in the direction you had it planned. Right? That's a common bitch by retail traders. Well, what the hedge does is, you're not stopped out. It can come and hit that thing and then go the direction you planned, and that's fine. Okay, great. But what you have to be able to do is, you've got to take this off right here, this mini off at, say, the break even here, or the average price, and then price has to get down to the original entry to be scratched. So here we are at the VWAP. Boy, I tell you, I'm tempted to put a trade on there just to see. But I don't want to get in something that I'm going to be jammed up with now for hours, right? And it's entirely possible that price may continue up and then Tokyo will kick in on top of that, and, I'll be underwater forever. So I'm thinking that I'm going to not front run and take the stat. Let me just check something else out over here. Do. So if we took this off at 75.67.5, what was I typing that now? And I'm not, going to let one sit all night and stuff like that, swing one and all that kind of crap. That's not, especially tonight. This is a holiday, right? I think I'm much better off to just be cautious, be upset that I didn't get something in the first of the week, and be content for that. And if it goes ripping down there and takes out the IB, the orb low, and I'll be disappointed. I'm gonna do something else here while I'm at it. I'm gonna try to make sure I've got, there we go. I'm gonna make sure I've got pencil and close exposed always. Now I'll have to reconfigure these, but assuming that I was gonna be in a trade, I wanna make sure, because as I said a minute ago, there's no general, there's no blanket or hotkey flatten everything. I wish there was in Bookmap, but there's not. It's only for per instrument, per tab. And you see what would have happened had I tried to front run that? I'd be going, God damn. Well, and there's a lot of metrics that we can use, that I can use, that I have to get into in Edgefield, which is what this weekend's going to be. Weak highs and lows, outside bar, all that kind of thing, which is having people are being really successful using those things to, build their trades on data, which is what I believe is the only way. And it's not just because that's some crazy idea I had, but building the trades on data is basically the philosophy of the most successful traders in the world, that realized and recognized this, that essentially the market is a random environment. The outcome of the next trade is 50-50 statistically. You can't, and trying to predict it is pretty impossible with all the millions of people that are inputting in the market every day. So you identify a strategy that happens frequently. You identify these parameters that justify an entry for that strategy, and then you capture a statistically significant data set to verify whether that strategy and those rules have positive edge, expectancy, whatever you want to call it, R factor or not. And if so, then you take that trade every time it presents itself in the live market. And that's how Renaissance Technology and Peter, whatever his name was, and Jones, Tom the Trader, Tom B, all of them, Tom Sosnoff, they all say the same thing. Not some epiphany I had. And so I'm, hook your wagon to a star, right? And it makes sense to me, so that's easy for me to buy into logically. And also, it's important to understand that is exactly the business model for the gaming industry. Casino plays no game on the casino floor with the public which they have not pre-identified to have a specific edge and specific rules. Casinos don't gamble. They are in the probabilities business and the law, and depend on the law of large numbers. Period. That's the truth. Look it up. When they put the game on the floor, the only mission in life for those people, those dealers, is to play that game as many times as they can in 24 hours. And as many 24-hour days as they can, because the law of large numbers will manifest that expectancy to the bottom line of the casino. And I guess it ought to be pretty obvious they make a lot of money. Most of them. That's why there's no emotions by the pit people, as they don't care if you win or lose. They know gamblers are going to win. That's the cost of doing business. That's why there's cocktails and chicks with big boobs zooming around, bringing you food and all that other stuff. It's to keep you there and keep you playing that over and over and over again. That's the whole ticket. The law of large numbers, to manifest that small edge, 2, 3, 4%. 5 or 10% of $100 is $10, right? Of $1 million, guess what? A lot of money. And that's how they do it. That's what they do. The law of large numbers. So that's why it makes sense to me, and why I'm struggling like this. Why I'm continuing. Because, gunslinging and discretionary trading, here's a bar trade and I'm going to take this and break out and all this kind of, it's fun, it's adrenaline, it's action-packed. But is there something you can lean on? And some people have consistent profitability, and good for them. But I am approaching it like this because I believe this to be a long-term successful idea, a business, not a game or a video game or a gamble. And something that could be taught to somebody, wife, daughter, whatever. My son, he doesn't need it, but, that's the idea. And we haven't broken out. We've pulled back a couple of times to the 25. I'm certainly glad I'm not front running. We're going to be now at 1900. We'll start the Asia, and I'll get rid of all these lines except the original Blue Boy, because this is on the first print of every session going back for donkey's years. Here's today. There's the first print of today, and here's overnight, and here we go. I'm sorry. Yeah, and here we go. And I get confused with all these extra lines, so I have to be sure and take them all off after the stream here. Man, I'm crazy. And it's a short trip, baby. Well, we know what the ratios are for the pullbacks. It will be the IB low, likely. We have figured out the rejection, and we've got we got everybody in there. All the filters. There we sit. this will wind up the top of the hour, and I'll flip it over to Asia. We'll do the data analysis again, get the lines all drawn up. You see what happens for this Asia session. I'm not very encouraged that we will have any action and or that I would take advantage of or act on it, because it's the evening of a holiday. And that's some data that's not being factored into hedge fund. What's the liquidity here? Let's look. Get back to the bright lights in Big City over here. Well, here we are. RTH session today. Here we are so far. Haven't even traded 500,000 contracts. Ooh. No. We haven't traded. Oh, that's the NQs. I'm sorry. MES has traded about 17,000 contracts. Jesus, this is light. Oof. Yeah, what am I doing? What am I doing? What am I thinking? And this ought to tell you something. Look at the day. This is today. A doji, I think, or shooting thing, or a hammer, or something or another. That is a candle of ultimate indecision. Opened and closed, same spot pretty much. Had a bit of a buying tail. The seller tried to get it down there, it didn't work. Couldn't get it above at all. Indecision completely after this Fed story. I'm hearing a lot of stuff about the Fed. I listened to Worsh's comments, but I didn't hear some of the stuff that I'm hearing people talk about. He apparently made some pretty drastic comments that a lot of people are shaking their head about. Oh, look here. Aren't we glad we didn't go short at 66? I am. Now, if you were a T-Lab guy, you'd be going, oh, see, this is price check at aisle 3. We had a price migration, now we're coming up here to price check at aisle 3, and then, is this too high? Too high, too low. I love it when Tom says that. Yeah. Well, we'll just hang on and... Whoops. Watch, yes. What was that? Why isn't that? Oh, man. Written statistic thing. I'm sure that's good. Market and price action control. Exactly what it is. Why isn't it working? Huh. Oh, I know what I'm doing. Wrong buttons. Helps if you hit the right keys, doesn't it? What a coincidence. What a coincidence. No, we're not starting soon. I hit the wrong button. Sorry. We're already started. We're going to be ending soon, though, for too long. Another hour and a half. Ugh. Oh, well. It's Thursday night of a holiday. Don't have to get up in the morning. Was up this morning at 4. Can get up normally tomorrow. Don't have to be all hyper go get 'em for the stream here. I think, as I have said before, I don't see much. I don't mind slow market, but I just don't think there's much in this Globex. So far, there hasn't been. And if you want to, I mean, again with Trading View, right? It's so handy to just go back and look at all of them. You just go back and look at them. There we go. No breakout. No breakout. No breakout. You know, no trigger. Well, you could call that a trigger, but then you got salt pounded in your butt because it went the wrong way. Well, that's another question with doing this on the Globex and then Asia. So, do you call this a breakout? And then what do? Because Asia started up, so typically this would pull back to around the 50 and you'd go long, and then it would trade up there, and that would be considered, depending on where you have your target, okay. But look what happened with Asia. And then where's the rest? Where's something else over here? This was pretty dramatic here. This was that string of sessions. No, this is okay. This is that string of sessions. This did break out. There's one. Nothing. So there's been about 2 or 3. Here's one that breaks out, but then it goes a completely wrong way. I mean completely wrong way. So that would have been a stop, absolutely. Depending on how you ran it, because breaks out and pulls back, what do you do then? Yeah. So I think it's probably, if I do this at all, it's going to be the Asia session, which is 1900 to say 23 or something, 2030 or something like that. And, I've not done it, really, but you could, I have done it just, goofing around with like an old Top Step X thing or something, throw on a trade and go to bed, you know what I mean? Put a target out there and say, okay, fine, and go to bed. But, seriously, when it's Asia, and you could conceivably put a trade on and have the targets and the stops. You couldn't do it with the hedge, but have the targets and the stops in place and go to bed, and then get up and deal with it, in the morning. Because one way or the other, you're going to get taken care of. Sorry. 45, 15 more, huh? Oh, boy. Oh. See what's going on in the snooze department over here. CPI of 1.5%. Americans 4%. Jesus, what a mess. It's really amazing to see how quickly things can change, really. Well, here's Iraq. Trump looks like, I thought he was fighting with him. He's putting a Medal of Honor on him. That's pretty cute. I have no idea who that was, but cool, whoever. Nice. Good for that fella. I guess this, from what I've been able to read, look at this. The dollar against the yen. This was really shocked the bejesus out of me. This was the market on close imbalance today. I've never seen 9,873,000,000 S&P contracts. An imbalance to sell. There was this many more for sale than there was offered to buy orders. 9,837,000,000. Shocked the bejesus out of me. Every day, by the way, this is every day at 14:50, so Central Time. Is the market on close imbalance? The big potential problem we have. See this comment right here? There is no way Israel is part of that, and they have said so. So, in my opinion, the danger to this whole thing coming unraveled is really high, and it's essentially based on the wild card is Israel. And Trump didn't do any favors by, insulting both Bibi Netanyahu and Israel as a country. Many times in the last week, I was really surprised. I don't know. I mean, I can understand why Trump may not be a diplomat. He never was. He was a rich kid in a Playboy casino. You know what I mean? But there's got to be people around him who would say, "Sir, you shouldn't. We shouldn't be insulting this guy because he's key to this negotiation." You know what I mean? I'm not a diplomat either, but I think my thinking is if I can figure it out and it immediately strikes me as important, I would think, or I would hope to God, somebody back in D.C. is on the switch, right? But apparently not. He really has some crazy things to say about it. So I think that's probably the risk. I guess. Just a guess. See what ground it snoozes up to. There's a... Okay. That's ground news, by the way, which is the only news source that I really feel I can get an unbiased news, you know, without some spin and crazy crap and who knows what, and never mind fake, you know, AI shit. And what that is, and I'll explain to you why that is, just while I'm sitting here doing nothing. You get the breakdown under every article. And if you go to this article, it will say who reported these things, what their usual, you know, are they usually centrist or a rightist or, you know, and what kind of articles are who wrote the thing, so you can decide for yourself whether it's spun or not. You know, here's the thing about Vans. Average oil prices fall below $4. Heavily covered by the left and center and not at all by the right, essentially, by right-leaning news sources. And then it would say the name of the sources underneath of it. So I find that to be probably one of the only news source I can sort of lean on. CNN is not, you know, they're not anymore. Fox never was. And now this Ellison and that tribe are taken, you know, so places like 60 Minutes that were always really looked forward to as a highly credible, data-driven news thing has just been eviscerated. Really weird. Really weird. But I mean, Larry Ellison has been known as a crazy screw loose for years, so it's not surprising. It's like Peter Thiel and, you know, those guys. I guess. Beats me. I just try to keep my head down, my ass up, do this job, and try not to worry about it. Or try not to even think about it much, to be honest with you. Because it just makes me unsettled. Sure glad I didn't try to anticipate front run. That's not a good thing to do. Okay, let's see how this works. Will it come back into place? Boom. Oh boy, look at us. There we go. Now if I throw up the... yeah, okay, good. Cool. Well, oh, look at here. We're just about at the top of the hour. Oh, aren't I happy, camper? Okay, I can tell you one thing for freaking sure. I'm not going to be doing any trades on this one. So, let's do this. Let's get this boy out of here, and this one, and yeah, I know I could be just keeping them and moving them around, but what the hell? What else have I got? Where we go? Okay. At 1900, when Asia starts up, I'll put the vertical line up for that, and then we will start over with the data. Trading view, you'll start, this will come to an end, and Tokyo will start, and I will change this statistics over here. the dashboard. I think this is the one I need to change now. Now, get rid of that one. And get this one. Okay. And when Asia starts, it'll be right here, and it'll look just like this right here, and it'll be the dashboard flopping along up on the top there. Now, I will, when we have 1900, I'll throw another vertical on, and we'll start looking at the data. Oh, look at this. I just had a lovely surprise. Gonna have a nice Wagyu ribeye, and I can tell you there's gonna be a lot less attention paid to this Asia thing now, by golly. On this holiday eve. My wife is a killer, man. So here we have Asia starting to print, right? It's 4.5 points so far, 4.25 points so far. And we'll just do all the same, you know, drama and all that kind of thing, and I'll be back and forward about it. But yeah, I'm not gonna. A lovely Wagyu ribeye and all the trimmings to go with it for us as a family meal tonight. pretty happy about that. There we go, Tokyo Joe. Now remember, all the same drama starts all over again with the stats, right? Which levels put in first, which, the zones will start to form, all of that stuff for 1 hour. And then we can start pulling the data together and away we go. Well, we can actually start that now, sort of. Where am I here? Okay. Get over here. So, here we go. 7 p.m. to 4 in the morning, which is what throws me off. Okay. Let's go to basic standard. 3 years. Let's try to choke this down a little bit to say 1 year. So that's not very informative, but I bet you this helps. Friday. So here's an important thing to notice. Double break, 57%. Single break, 43. 0 inside. Boop, 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 boop. Given this MES 1 year this session, which is correct. Now, oh, you know what I'm doing wrong? What a dork. I just moved right on to initial balance here. It's fine because I have the orb trades set up with the same time period as the initial balance, 1 hour. But had I not paid attention to this properly, I would have been using the wrong template, which I have set up for. I do have an orb template. Okay, let's see if this looks the same. Okay, that'd be kind of fun. It ought to. It better. Okay. Yeah. Okay. MES 1 year. There's the same Asia. Let's get up here to standard. Oh, you look at this. It plots completely different. Instead of the pie chart. I didn't notice that. Disregard this because it doesn't, you can't customize this to be 1 hour. I need to tell somebody that. I don't care, but this is basically the what's in play version. Okay, so here we go. 26, 19, and 64. MES 1 year. That's the zone. Standard. Without days. That looks pretty weird to me. 24, 19, and 54 double break. That is not the same data that we had over here. This is what data we had over here, and it's got nothing to do with no break. Oh, I wonder what the difference is. She said, I don't think that's a good thing, is it? All right, at least it's not something that so there's 54 and 45. Double and single. Completely different. But this is also day of the week, so I will give it up for that. It looks like the same freaking data. How do you do that? Well, let's do this. I've got to say that I find that a bit concerning. There was the breakout, by the way. And I just am thinking, okay, opening range breakout, 60 minutes. This is that. What? Okay. See what happened to me there? But still, it's still very different. Standard, 7 to what's Medenkus. So I want to be sure when I want to go to the opening range breakout and use this, or the initial balance, and use this same exact settings. Standard, no customization. What's customized? Anything around here? Nothing. 1 hour by wick, okay. And there's what we have. 27, 21, 50. Go to the opening range. This is the opening range, sorry. Go to the initial balance. Same zone. I think that was a year, so let's do that. MES. No custom anything. Standard. There is no. The substantial data point in the opening range trade is the no break. Oh. That, my boys and girls, bothers me a lot. I'm going to be burning up the help thing with screen snaps and all kinds of crap for somebody to explain to me what this is about. Wow. That's pretty weird. If you see my point. So the initial balance meaning the first hour. Let's make sure I've got it right. 1 hour from 7 to 8. Yeah. UTC 4. That's wrong. Or UTC 5. Hold on. We are UTC 5. Not UTC 4. Okay, I'm being called to go do something a lot more fun than stand here and fight with this. Oh boy, that was good. Wow. Now, if I can keep the comb off, I'll be outside. Well, we got 45 minutes left. So our IB high is going to be, I'm thinking that we did the old dipsy doodle here real fast. Yeah, 65, 75, 56. So let's go with 65, 75. Boop. Boop. And right now, 5,600, huh? This is another thing that I've noticed at the, with the Asia Globex, is that very narrow range. You know, 9 handles. Now that I said that, let's make sure I'm not a dork. 970, 975, wow, kind of a dork. What a difference, huh? And it's going to be set in another 15 minutes, so unless they get real serious about some price action, this is going way inside. And I can tell you right now that that is not enough meat on the bone to trade. And what I mean by that is, if this is 975, the whole thing, call it 10. 2.5 points each. Zone. Well. So if it pulls back 50 and you make it all the way, that's 5 points? No way in the world. The whole range is only 975. So there's not enough meat on the bone to trade it. And I'm not prepared to do the breakout, do the retest, and then let it run all night. That's not part of the game that I'm trying to prove or solve here. And I think probably that we've demusiced ourselves here. Oh boy, let's just have a look at this one over here. Any news on the oops front? I bet you that, here's a prediction. I bet by Wednesday, this MOU is going to be upside down. Israel is going to really up the ante on Lebanon and perhaps Syria and maybe even Iran. I think they're going to try to do everything in their power to see to it that it doesn't come to pass. Because I don't think it was the objective that they had in mind when they got Trump to go along. I don't think, and I'm certainly not. Remember. I'm a long way from a diplomat. I stayed at the Diplomat Hotel one time in Miami. About 50 years ago. So, yeah, here we go. Well, I'm not even going to bother putting the zones on or calculating them, to be honest with you. And I guess I better, because it's part of the deal here. But let's look at the hedgeroonie. Where did that go? Oh, there we are. So we've got 65, 75. Oops, too many dots. Too many periods there, boys and girls. What's going on there? Oh, shit. Let's see if we can unwind all of that. There we go. Well, that was a pain in the ass. 65.75. Now, don't argue with me. And 56. And 975 and nothing for the zones. I will need to dig into that data. I don't want to say anything that could be construed as incorrect, but I really need to. I really am. I'm sure that I'm doing something wrong here, but I'm fairly confident with this, and I'm not sure what that could be. So I'll have to ping Brian, the support guy that seems to always come back to me when I ask him about zones and stuff. Well, I'll tell you what, that was a great dinner. And I'm pretty happy that tomorrow's a holiday. And that Tam doesn't have I don't have a 4 o'clock in the morning or 4:30 in the morning wake-up call. And, but I have a lot to accomplish here tomorrow during this holiday, a lot of back testing and homework to do. And a bunch of stuff I need to do here at La Casa. Switch out the shower valves and all. We have older plumbing here in this house, cast, and there's a lot of garbage comes down the pipe, the water from the Houston plumbing, the Houston supplies. And we must have had a load of it come through because all of the shower valves in our master bathroom got, messed up. So I've got to pull out the cartridges, clean them, and replace them. And in both the sinks back there and also the 2 shower valves, we have opposing shower heads. So there's always something in there. Always something. I realize that's not information for the stream, but on the other hand, this is my virtual trading journal, so I'm talking to myself, and I don't think anybody's listening or probably ever will to this because it's homework, and I don't blame them. Okay. Well, here we go. 54. We're about there. I guess I could throw these levels in. What else am I doing, right? So we got 63 quarter. Boop, 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 boop. How did 63 quarter go? Oh, there. 60, 75. And least but not less, 58 half. Good enough. Right where we're trading, by the way. All right, let's see what happens. They break it out, they pull it back. That doesn't look right. But it is. It's because I'm rounding up and down. I guess I could make this 58 quarter. Might make it look better, or at least be more symmetrical looking. I guess that looks a little better. It just, just 25% of the range is all it's supposed to be. Bottom of the hour here, or top of the hour, is the opening range, as I have it set for 1 hour. Right here. Now, the thing we're going to want to look for is the orb high was put in first, and we're going to want to catch this ending zone, which I went through earlier, but we'll do again. It's real simple. Opposite the first level that was put in, you assign 0 to 25, 25 to 50, 50 to 75, 75 to 100. That's simple. The zone designation is determined based on the closing price of the final bar in the zone. So this will be the final bar. Wherever this bar closes and the next one opens, wherever this closing price is, down here, up here, up here, up here, that's the zone. Right now it's in the 0 to 25. Pops up here, 24 to 25 to 50. That's all. Real simple. But it does make quite a difference in the data, surprisingly. I'm real pleased that they focus on the importance of days of the week, and this is even better. Now on the on the look back test algo analysis, it's called. It actually breaks out the back test to days of the week and hours of the day. So it's quite comprehensive. And it's configurable, which is important. And then I'm going to let it run about 30 minutes past this. Shut it off. I will let the data run until noon tomorrow, whenever the closing is, just because there's a lot of people that use these session prices. By the way, I don't think anybody's going to probably tune into this stream, but in case, I share these session prices free, no problem. I'm happy to do that. I start publishing them at 5 o'clock on Sunday evening through typically 1600 on Friday, but tonight's different. for anybody that can use them. Typically, a lot of people in the Traders Lab and everywhere it does. I don't know whether, I guess they still do. They have for a long time, apparently. And yeah, if you could use them, it comes as a CSV file from Google, so you can, if nothing else, if you don't have any software that can look at them, you could just have an Excel file there, and there's the data, there's the name, there's the price, and you know, you're all set. And there we go. All right. So, as expected, and just by a whisker here, look at this. Our closing zone is 0 to 25, just by a whisper. Okay, let's get over to data. And let's go to rejection. Doodly. The first, now the high was formed first, so there's ooh, look at this. 100% probability we're going to take the low. That doesn't seem like that was correct a minute ago. Oh, it's still doing the 0 to 25? Okay, so it's already in there. And this is the initial balance. I'm just going to do something for grins. Okay, and now I'm going to do the opening range. Oh, sure. That's pretty interesting. Well, there you have it. It's either 100% or it's 66. That is really, I gotta say, weird. Let me just see something. 1 year, MES, custom stuff, Friday. That's pretty weird. And looks like we're going to break them out down here. So the next thing that we're going to want to do is do the rejection buy. And that is not the right one I want, the retracement. There you go. I'll get it right. Okay, so the opening high was broken out. No. Opening range low was broken out. Probably. Their terminology is breakdown is short side and breakout is long side. 66% probability we retrace to the 25% line, and 40% we go to 50. So what that says to me is if we break the IB low, or the OB low, the orb low, how low can you go? We have a 66% probability we'll retrace to here, and a 40% probability we will retrace to here. Now, and another 27%, 22% we retrace to the 75. And that's way too close to the top, right? So as far as I'm concerned, this is a real tight range. We would have to get to at least the 50% range. No, this is not a range I could trade, because the typical idea is that when you retrace to the 50 here, for example, or in this area, the target is the low. Again, it could go further than that, of course, but that's kind of the low based on the data. So, and here we're going back to the 50 now for possible front run. I'm not going to do that either. By the way, that's our That's our stat, by the way. I forgot to mark that. Oops. Sorry about that. So that's the end of the zone. We have not broken it out. We only have about 4, 5. What is this? Nobody move. Nobody move. We've only got a 9.75 point range. If it was 10, these are only 2.5 points apiece. You need the whole range. I'm not going to be interested there. Have a great night. I don't think that I'll stand by and wait for 8:30 like normal, or 20:30. But I'm not interested in a trade, and that's why. That is why, baby. And with the 5 lot, that's, maybe not very realistic. But the problem I see with a narrow range like this, well, for example, look at this. Look at the price action. Just forget all about the statistics and the this and the that and the something else. What's this price action? It's a freaking chop fest. And it's happening within 4 points. Well, if that's not a retail rookie idea, I don't know what is. And there's the breakout to the low side. So somebody that front ran and said, "Oh yeah, baby, I got it." See, I pulled back to the 50 and I front ran that and I shorted, and now I'm in the money. 4 points. Less than $30. $20 to be exact. Times 5. Okay, times 5. $100. With the copy trade and all that stuff, but I don't ever think about that. I think about this as trading the account. And and it may break down. They may go falling out of bed and end up in the basement someplace. What the hell do I know? But yeah, okay. And I'm sure that there's a lot of people that are going to go, "You old dork." And yeah, in hindsight, in the rear view mirror, boy, oh boy, was this the perfect get on spot. And now we're down, 6 points. But it's not based on the data. So I don't feel bad about it at all. Interesting, though, let's see. It will be interesting to see in the morning how this, where we end up here in comparison to, like, are we going to trade down to these lows, to the IB low, or from the, this is the IB, remember. There's big, wide 50 handle beauty over here. So it's taking it out, and there it is. Cool. All right, there we go. We've taken it out. We've taken out the low. So you should expect 66% probability we'll pull back to here. 40 to here. We'll see what happens between now and the bottom of the hour. And I am real puzzled about this thing right here. I'm making some screen snaps here to pass off the support. Now let's get back to the IBC. MES, 1 year. Retracement. Any size? Nope. Wait a minute. What's this? Oh, that's retracement. Cancel. Never mind. Yes, cancel. Let's go to this guy over here. Rejection. 0 to 25. The 100, the 90, and the 10. That changed now. Remember, it was 100 a minute ago. Now it's 90 and 10. Friday. Everybody's the same. Hold it. Is that right? Did that change? It did. No, 90 and 10. Okay, cool. That's consistent. That's great. I'm not picking this apart. I analyze what I've done wrong, and I'm going to send these snaps along to the support fellows, whoever they are. It seems to be only one guy that always answers me. And ask him what is different and what did I do differently. Because as far as I know, the report is the same, given the IB range, which is 60 minutes. Based on the first 60 minutes of the session, and the day, and the ending zone. Now, if there's some other OIB time frame, we'll see. I don't know. Maybe I'm making a stupid mistake someplace, but I would like to know what that is. This is the wrong. This should be. These are the wrong times. I think that's the problem. This is based on Eastern. Okay, let's try this. Same thing. Okay. Wow, look at it sell. Wowie, wowie, wowie. Didn't I screw up by not front running it? Yeah, go figure. Huh? Not a blink of a retrace. Not a blink. Well, I'm tired and full and had a glass of wine. I'm not going to worry about fighting about this thing, but I'll analyze this methodically. Session, time, instrument, and see the difference. In the meantime, calls for another glass of wine. Nice Malbec, by the way. Yeah, son of a gun. That would be a nice way. That 10-pointer right there would be nice, or 8 points. And the overnight low. Well, I don't know. This is one of those situations where Monkey Boy can come in and bite you in the ass really hard. My plan and my methodology is to wait for the statistic to be taken and follow the edgeful data to make the trade with the retest and the forward movement, not the front run, So even though it's so easy to see in hindsight that this was a great idea, but that's Monkey Boy. That's all of that wiring that's in us that's bad news as traders. That stuff that's come down from it, from evolution. FOMO, fear of missing out, was obviously FOMO. Revenge trading, seeing patterns that don't exist, confirmational bias, risk aversion, all that. I have to be aware of those things. And I don't believe that you'll ever get rid of them, or you can never purge them from your wiring or your DNA. But what I need to do is be absolutely vigilant to recognize them. If I'm feeling dopamine or adrenaline or anger or whatever, the first thing I want to do is not start clicking the mouse, right? Move my hand away from the mouse. Think about it. Go, thank you very much, Monkey Boy. Why don't you go out and play with the raccoons? And then get back to thinking and being a data guy. That's my approach. And boy, did I miss. But when you, in hindsight, of course, the rearview mirror is always so clear. What a beauty, huh? Well, if you want to get real, what a beauty. Why didn't you just know to short it over here? That would have been a beauty. That would have been a bigger beauty. But that's hindsight. That's not the hard right edge. What did I know to do right there? Why would I have thought to short right there based on this? Sure, when you see this and you see this, of course it's a good idea. That's the problem. That's why it's so important, and why I have actually my book map set up this way. I want all the data I need to trade right here on the hard right edge, because this is where we function. And this is where you have to make decisions, not some bullshit looking back in the rearview mirror and, some guy that's going, oh yeah, well, see, I saw these, and when I saw this and we came down here and tested back up, I knew better. That rearview mirror crap, it makes me crazy. It makes me disappointed, actually, in the people that are doing it. My theory is, if you can't trade live, if it's such a wonderful trade and you're such a good trader and you have all these wonderful examples where you can go on TradingView and point out where you did this and where you did that and where you made all this money, why don't you just do what I'm doing right here? I'm an old cowboy from Montana, and I figured out how to use this stuff. I figured out how to stream this to YouTube. Stream it. Then everybody knows what you did. But that's not how you entice people to, well, if you want to see me trade live, now you're going to pay this and get into that Discord thing and all this kind of crap, or, my students this or my students that. That's the last thing they want to do, is show what they're doing on the stream, in my opinion. Just my opinion. And they're making money and I'm not, around YouTube, so maybe they're a lot smarter than I am. Probably. And in about another 10 minutes, they're going to be not worrying about me, because I'm going to be gone Johnson. I'm going to close this off, start wiping off these. I got to get this ready for No stream. Okay, tomorrow, so it'll be ready for. I don't think I'll do the Globex stream again on Sundays. I don't think there's been enough. This would have been the only time that I'm really regretting that I didn't front run or take a trade in these 3 weeks. Well, that's not very good. That's not a very high hit rate for the time and effort involved in the stream. So I think I'll just stick with my usual for TH. And let's see. What else kind of trouble can I get into here? Well, remember that every trading day, Monday through Friday, 8 o'clock Central Standard Time, the pre-market set everything up. This pull the statistics together, analyze the pre-market and the potential action around the open, and then live trade for the entire cash session until 1500. That's the plan. It's my virtual trading journal. Hey, Panda. Well, that is about enough to piss off the Pope, though, I gotta say. And of course, the inclination or the desire or the monkey boy or the emotion, whatever the hell you want to call it, hide, as Tom refers to it, is to take the front run, right? Because everybody's excited and wants to, everybody's, oh, I want to get in on that thing. The front run. And it's exactly to the 50 tick. And there we go. Now it turns out to be enough of an extension to be almost 10 handles. Great trade. Fine, enough meat on the bone. But only, 4 up here. So it's the probability that you need to take. The setup doesn't say front run. So here we go. And I'm going to close this bad boy down in another 4 minutes. So thanks a lot for coming by. If you do, like, subscribe, send money. And have a great long holiday weekend. Juneteenth tomorrow. And so, enjoy yourself. Get outside, get some fresh air, get some exercise, do something fun with your family or whomever it is you do fun things with. Your dog or your horse or whatever. Your activity partner of choice. And I'm going to be doing some chores around here pretty quick and then relaxing and digging into that data tool and seeing exactly what I can figure out with that discrepancy there. Now remember, there's I don't remember, but you should. There's a 100% probability that we'll break out the low. And we did. My. Right? 100%. Using the initial balance. It was not so with the opening range, which is the part I'm trying to understand what the difference is. But here's our retracements. There's a 49% probability. This is what we're doing. 63% probability that we're going to pull back. We're going to retrace back to here. 42% we're going to make it to here. And a 30% we're going to make it to the 75. That's pretty scary because that's damn near across the range. But as far as I'm concerned, it's not worth the risk. The risk to reward, the meat on the bone, however you want to look at it, is not there. And don't forget that there's all these obstacles across here. Narrow range, all these obstacles. All of which have the potential to turn the market around and do something else. So I'm going to call this at the bottom of the hour here. I'm going to call it. Have a great holiday. Thanks for... Well, I don't think anybody did join in this stream this evening, but that was not the point. This is my virtual journal. I have upheld my commitment to myself and to the stream and to the journal and those who participate. No trade is ever taken off the stream. Never going to see a playback or a replay, so that's why I'm streaming, to do my homework about these opening range for both the Globex and Asia. And so far, nada piñata. So now what I need to do is get rid of all of this stuff. And actually, no, I can't do that because it'll nuke all of them. You see, I have these monkey or Blue Boy here has been going for a long time. And if I were to say erase all drawings, all of these would go away. And I mean a long time. RTH, ETH, RTH, ETH was, you know. Now, granted, it's a new contract here, and so these would only be on the U contract. So I guess there's nothing much to worry about. But there we have it, and there is the bottom of the hour, and there is the end of this extravaganza. Have a great weekend. Do something healthy for yourself and your family, and fun and safe. And I'll see you. If not, well, I won't say this. I'm not sure, but I don't think I'll do this stream anymore, this Globex stream. I think I've found out what I needed to know. So I will see you at 8 o'clock Monday morning for the RTH risk neutral trading session. Pre-market and then the open, and we trade them all day until 1500. So have yourself a great weekend, and I hope everything is peaceful and quiet and lovely wherever you are in the world.